All right, well, good morning, everybody. John here with Crypto Top 10, coming back at you with some of the trending articles in the crypto news space. As always, straight off the top, thanks to all those who have subscribed. And if you check out down in the description, there's a link or links you can follow to check out all the articles talked about today. Got a nice little run for you of some articles, and of course, we do got to talk about at the end how Bitcoin just eclipsed $16,000. It is getting closer and closer to recapturing its all-time high. In fact, I saw some fun little statistic that Bitcoin's price has only been higher than it currently is for 12 days in the history of the coin. So, pretty exciting stuff. But before we get into that, we got to talk about what's possibly fueling this in some part, PayPal. So, the payment processing giant PayPal has lifted its waiting list for crypto services starting on November the 12th. So, yesterday, if you're listening to this on the day it comes out, PayPal customers based in the United States will be able to use their accounts to buy, sell, and maintain Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. In addition, the company announced that its customers will be able to buy up to $20,000 a week in crypto. The payment company announced the launch of its crypto service on October 21st, which I do remember talking about on this channel because it was so freaking exciting. It was definitely a surprise to those of us in the crypto space. There had been some rumors and hints, but none of us thought it was really going to happen. According to the press release at that time, they expect to incorporate CBDCs, or central bank digital currencies, and other digital currencies issued by private entities. The company has partnered with the Paxos Trust for custody of its crypto assets. So that is pretty darn nice. Initially, there was a wait list and invites, but the amount of interest that PayPal says they got from launching this service was absolutely insane. So they've raised their purchase limit from $10,000 to $15,000. Now it'll be $20,000, as well as lifting the waiting list so everyone in the United States can use it. So PayPal has recognized that the financial world is moving towards the adoption of cryptocurrencies and other digital assets smartly, in my opinion. Therefore, they seek to meet the growing demand of more than 340 million customers worldwide. PayPal's crypto services are expected to expand to Venmo and its international customers in the first half of 2021. So right now it's just the United States, but that's a large chunk of people who are being exposed to it, with more to come, which is why I personally think we are only in the beginning, early stages of sustained growth for all of these cryptos, because it's only going to expand to more and more users as the months wear on. What fun. So, as part of the deployment of its crypto services, PayPal had to obtain a BIT license in New York, which is notoriously a hard state to get a license in. It actually requires that its crypto custodian partner to maintain real Bitcoin at a 1-to-1 parity for each that is purchased on the platform, and it applies to all cryptos offered. So that means for PayPal to be able to offer these cryptos, they have to hold the equivalent amount of crypto in their own accounts, which I don't think I need to explain the math to you. But basically, if you buy a Bitcoin from PayPal, they have to have a Bitcoin to sell to you. So the amount of crypto that they are going to have to pull off the market is definitely going to have a positive impact on the price of Bitcoin and the rest of the cryptocurrencies, because the more that leaves the market, the higher the demand is the lower the supply, which will increase the price, leading to increased demand with another decrease in supply. So you see how this spirals up into quite a fun tornado. Pretty cool. Pretty happy with all this. I cannot wait to see how things continue to develop. For any of you out there who are thinking about, oh man, Bitcoin's so high, I'm going to wait, I'm not going to buy in. Again, I have to preface this with, I'm not a financial advisor. You need to do your own research and make your own decisions. But I got to say this. If you did not buy Bitcoin when it was 9,000 because it was too expensive, if you didn't buy it when it was 12 because it was too expensive, and you're not buying it now because you think it's too expensive, what are you going to do when it's 50, when it's 80, when it's $100,000? The mantra is always the best time to have bought was a week ago. The second best time to have bought is today. If you truly believe in your heart of hearts that Bitcoin is going to one day be $1 million, why not buy it at $15,000? Why not? Why is there any price point below $1 million you wouldn't be willing to buy Bitcoin? Whatever the number is in your head, if you think Bitcoin will be 30 at the end of this bull run, well, it's 16 now. You can double your money. If you think it's going to be 50, you can over 3x your money. Know the risk you're willing to take, but at the same time, if you believe that Bitcoin is here to stay and is only going to go in price and usage is only going to increase, which I truly do, you need to buy what you can afford. You really do. You will thank yourself 3 years from now. Uh-oh. Baby's a bit loud. Might have to go help him here in a second. But that will do it for the first article. Let's hop on over, talk about Uniswap. So the world's largest decentralized exchange, good old Uniswap, has just conducted its first community call, primarily to discuss what they're going to do, because uni farming is going to be concluding on November the 17th. For those of you who don't know, you can stake money crypto in different pools, and you earn Uniswap as an interest, but there's a finite amount of that, and their 4 big Ethereum pools are all going to be running out on the same day, just under 4 days from now, November the 17th. The call ended with no clear direction from Uniswap and no proposals submitted to extending uni farming or launching any new pools. So we're going to see what's going to happen next week in terms of volatility with Uniswap and Ethereum, and hell, just the rest of the crypto space. They have been running these Ethereum-based liquidity pools since September the 17th, so it'll be a full month. They've been earning 583,333 uni per week per pool. So the collateral injection of over $2.4 billion into those pools has propelled the DEX into the top of the DeFi list in terms of total value locked. But of course, those incentives are about to come to an end. There's some fear among uni holders that token prices might dump in the short term if users withdraw liquidity and sell off previously mined uni when incentives dry up. There's also concern that up to $1.1 billion worth of Ethereum could be withdrawn from those pools and leave the platform, being sold or reinvested into competitors or into other higher earning incentives. So here's the thing with this, that Ethereum is probably being deposited from people who are holding it or looking to stake it in any way, shape, or form that they could prior to the launch of Ethereum 2.0. So I don't think $1.1 billion worth of Ethereum is just going to hit Coinbase and be sold off. It will probably, the majority of it will be held on to and reinvested into different things. But I could see Uniswap having a pretty big fluctuation. People will probably sell in anticipation of a dump, which will cause the dump, and then some people will buy in, getting Uni at a pretty steep discount. So good luck catching that falling knife. But all right, a bit of other news. Binance, they're launching an Ethereum mining pool with 0.5% fees. That's not too bad. So after launching its own Bitcoin mining pool back in April, the crypto exchange Binance has now launched an in-house mining pool for Ethereum. For the first month, so between November 12th and December 12th, Bitcoin is trying to attract miners by offering 0 fees. Not too bad for the first month. After that, those contributing their hashing power to the pool will be charged a competitive 0.5% commission on their earnings. Binance's instructions for setting up a mining pool account note participants will need to use a Windows or Linux operating systems, a GPU, NVIDIA or AMD graphics card with at least 4 gigabytes of memory, 5 gigabytes of virtual memory for each GPU, and mining software such as Hive OS and Easy Miner. So not a minor amount of power that you'll need, but achievable for a decent number of people out there. So the Ethereum mining pool will use a similar system to the existing Bitcoin one. It makes sense. If it ain't broke, don't fix it. Called PPS, or full pay per share. Binance's Bitcoin pool notably also offers a feature called Smart Pool, which enables participants to automatically switch hash rates in order to mine the most profitable of the 3 supported coins based on the SHA-256 algorithm: Bitcoin, Bitcoin Cash, or Bitcoin SV, but you're still paid out in Bitcoin. So that could be pretty interesting if they launch an Ethereum mining pool and you're able to switch it between supported ERC20 tokens or other Ethereum compatible things. It could be pretty interesting indeed. This is an effort to, one, help increase decentralization on the networks, and so Bitcoin can make a nice chunk of change. It's a win-win, so I'm okay with it, and I think you guys should be too. All right, so hopping on over, Ripple just filed for another trademark over here in the good old USA. So it was filed on the 6th of November. It's called PayString. It doesn't give a lot of information to what business or product it's going to be marketed under, but the trademark registration is actually identical to that used for Ripple's RippleNet's filing earlier this year. According to the description, PayString is going to cover quite the span of different categories for different electronic financial services. The use of fiat and digital currencies for remittances and gifts, receiving and distributing electronic payments in fiat and digital currency, currency exchange services in fiat and digital currency, financial transaction verification services, and financial management and administration services for the transmission of digital currency via electronic communications network. This is more just a nice little Ripple update. Look, we did something, but it doesn't actually, it's not really indicative of anything. Back in August, they filed 2 trademark applications with the office that included the same application description as RippleNet and PayString. Filing for another Ripple called Ripple Impact sought to cover categories of charitable foundation services. So honestly, with all these trademarks, I think it looks like they're starting to build up kind of like what they think their portfolio is going to be. Probably will launch sometime in early to mid 2021 with like, hey, we've done this serious rebranding, or we as a company are pushing forward these initiatives. It's PayString, it's RippleNet, it's Ripple Impact, and all these different things to kind of push forward. However, they are, as I've talked about on this channel before, looking to get out of the United States because they're worried that Ripple will eventually be declared a security in the country, which will severely hamper how they are going to do business. So they're looking into a lot of different places. I expect that move will probably come first, with the announcements of all these things to come after. So, little update on DeFi and its dangers, particularly Acropolis. They run a protocol for generating interest on pooled Ethereum-based assets. It's the latest DeFi project to get hacked via a flash loan. Several of the pools within the project's Delphi savings pool for yield farming were drained of over 2 million DAI. DAI is a stablecoin, so 2 million DAI, $2 million, per Acropolis. At 1436 GMT, we noticed a discrepancy in the APYs of our stablecoin pools and identified that 2 million DAI had been drained out of the Y-Curve and SUSD pools. The project reported in a statement released the evening of the 12th, so late last evening. Curve is a protocol for trading stablecoins and earning interest. According to Acropolis, other Curve pools, BUSD and SBTC, as well as its Aave and Compound pools, were not affected at all. The attack seemingly comes as a surprise for Acropolis, which said that the pools had undergone 2 different independent audits. However, they did say the attack vectors used in the exploit were not identifiable in either audit. So basically, they audited these protocols twice, they didn't catch it, and then someone else found it. Audits are great, but again, these are high-risk investments, and, well, crypto is high risk, though that risk is greatly diminishing as the time goes on. DeFi seems to harken back to crypto's early days in that essence, if you ask me. So just keep a real close eye on what you're doing, and never invest more than you're willing to lose. So the essence of the exploit in question is a combination of a re-entrancy attack with a DYDX flash loan origination. So yeah, they did something kind of hinky. The hacker didn't keep the stolen funds for long, obviously. They immediately transferred the winnings to another wallet. And Acropolis came out committed to reviewing the code and exploring ways to reimburse users for a loss in a way that is sustainable for the project. While it does so, it's paused all stablecoin pools and it has informed exchanges of the hack. So we'll see what, if anything, they're able to recover or if they're able to identify the hacker. Heart goes out to all those who use Acropolis and got impacted by this issue. Womp, 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 womp. All right, but hey, kind of rounding things off, we got to talk about Bitcoin. It's currently sitting at about $16,200. Let's say $16,115.37 Sorry. But we got to talk about Stone Ridge because they just bought 10,000 Bitcoin. Dear Lord. The co-founder, Robbie Gutman, explained why the company recently bought 10,000 Bitcoin as part of its treasury reserve strategy. He touched on why people are fascinated with Bitcoin, and he listed 3 observable trends. He's talking about trends, and then he talks about something else, so we'll get into this. So speaking about Stone Ridge's long journey to Bitcoin, he stated, on a personal level, according to Gutman, there are 3 flavors of the crypto nerd. All right. Little offended, but I kind of agree. His first flavor, he says, is cultural. People with this mindset usually have first-hand experience with the fragility of monetary systems and regimes. I expect that kind of extends to people who have experienced great financial difficulty in their life. His own example is how his grandfather's wealth was destroyed with hyperinflation in Germany. And that makes sense. There's a reason why Venezuela is so popular with crypto, and Lebanon and all these other quote-unquote failed states. As inflation increases, people seek to put their money into things that will hold their value. The other flavor, according to him, is timing. There are people who saw the world before the internet. So he's saying not millennials, but probably Gen Xers, maybe some younger boomers. The transformative power of open source networks, which Bitcoin is a perfect example, fascinated a lot of people. I am a younger-ish millennial. I can remember playing Oregon Trail 2 on a computer in elementary school, and the internet had just become a thing. So definitely the world has changed incredibly in my lifetime. So I think I can kind of fit in with this example as well, even though I might not be in the group he originally intended to mean. His final flavor is professional experience. His experience working at Wall Street, he knew all too well the made-upness of fiat monetary systems. He said, yet this shared illusion we all buy into is what keeps the world spinning, and he cited the financial crisis of 2008 to demonstrate how fragile these systems could be. I came of age during the 2008 financial crisis, so that kind of impacted my college experience a little bit. Not as bad as some other people, obviously, who were young adults and getting into the workforce at the time, but there was definitely some uncertainty in my household as well. So Gutman did explain that a lot of people at Stone Ridge share similar mindsets and have some flavor of the same genesis of personal interest in Bitcoin. This guy likes saying flavor. Get him with Guy Fieri, right? So, while the company was considering investing in Bitcoin since 2015, no clear decision was ever made for some time. At some point, he did say a decision had to be made to either stop talking about it or get exposed to it. And then he also cited 3 distinct observable trends. More fiduciaries are making a lot allocations on behalf of their clients as opposed to making personal investments. So basically, instead of buying things up for themselves, they're buying things up for their customers, and that is picking up somewhere between 10 times and 100 times more. The second trend is a growing demand for more sophisticated financial products beyond just, I want to buy some Bitcoin. And finally, he outlined a dramatic shift in the tone of existing financial institutions, with increasingly more of them looking to offer Bitcoin or Bitcoin-adjacent products to their clients. He's pretty gung-ho about this and goes into pretty good detail as to why they're buying up this. So Stone Ridge doing this, Grayscale, PayPal, Circle, all this is just contributing to this snowball that is slowly rolling and getting bigger and bigger. All that remains to be seen is how the retail investor, the mom and pops, as they call them, people like you and me, I am a pop now, which I'm still getting used to, but younger people, Gen Zers, younger millennials, hell, even Gen Xers, getting into the market for the first time, exploring things. PayPal is a great gateway for this. A lot of people already have accounts. They've been curious about it for a while. This takes away that much of a barrier for them. It's going to be very interesting to see how that will drive demand as people see prices increase from institutional investors. When will retail investors hop in? The worry is that they will feel that they have already been priced out. But that will do it for the trending articles in the crypto news space. Let's take a look at the top 10 cryptos by market cap. Do a little refresh here. Bitcoin is currently sitting above 16,000 still, $16,051.86, up just about 0.5% on the day, but 4% on the week. Not too bad. I wouldn't mind to see some consolidation here at the $16,000 to $16,500 level before pushing on, but we'll see. Ethereum is up 1.5%, $465.82, and up over 6% on the week, so not too bad. Litecoin is having a stellar day, up 10%. Good for Litecoin. Otherwise, it's an okay day. Nothing too insane in the top 10 other than Litecoin, but nothing too bad. Only one coin is down in the top 10, Bitcoin Cash, which, whatever. Wow. So Content Value Network is up 1,164.71% on the day. I think that coin just dropped. Why it's going up like that, I have no idea. Uniswap is actually up 22.5%, with Aave up 21.33%. So good for all of them. Looks like some of these DeFi tokens are rebounding a little bit. Good for them. Biggest loser on the day, ain't too bad. Cybervein is only down 2.76% on the day. Not horrible. Not horrible at all. So hopefully this continues. I could really use a $100 Aave. That'd be nice. Double my money. Anyways, that will do it for today. If you've made it to this point and you haven't subscribed, please do. It's a simple button click, whether you're listening to this as a podcast or watching it on YouTube. And then down in the description, there's a link or links you can follow to talk, so that way you can read all the articles I've talked about today, and you can make your own decisions. But all right, I believe it is Friday, so have a great weekend, y'all. Peace.